All right, Texas Instruments coming out and beating second quarter estimates. Also on the outlook for the third quarter, let's bring back in Courtney Donahoe for a recap. Court?
Well, Texas Instruments is so important because earnings are a barometer of demand in the tech sector and electronics out there. Now, earnings per share with a recap coming in at 20 cents a share. X items 25 cents a share. Analysts were expecting 21 cents a share as surveyed by Bloomberg. Now, let's look at revenues. Revenue coming in at $2.46 billion, and that's in line with estimates. But we got to focus in on the outlook for the third quarter. Earnings per share, X items coming in at 29 cents a share. Estimates were for about 29 cents a share. Now, revenue between 2.5 and 2.8 billion. Analysts were expecting $2.5 billion. Now, orders for some products are beginning to rebound, and this comes after global demand has been cut in electronics. Texas Instrument has posted 5 quarters of sales declines, but the company is benefiting from the expansion of mobile networks in China and rising sales of smartphones. And as you see, shares are down around 2% in the after hours. Matt.
All right, Courtney, thanks very much for that. Now, Adam Benjamin, an analyst at Jefferies and Company, upgraded Texas Instruments from an underperform to a hold today. He joins us now from Boston with his reaction. Adam, what do you think, first of all, of the numbers? I mean, a positive surprise, obviously, but you must have been expecting as much.
Oh, definitely. The numbers were good across the board, both revenue, gross margin, and EPS. I think that was expected, as well as a solid guidance for Q3. We had raised our numbers pretty significantly more for Q3, and they did not disappoint. They came pretty close to that. Obviously, they're seeing a strong recovery in their analog business across the board, which they indicated, orders up 27%. So clearly, that's what brought us off our underperform rating and brought to a hold rating here. Stocks moved up a lot, but clearly business continues to recover off the bottom, and we think there's limited downside here.
Adam, this is Courtney Donahoe. I want to ask, what are you seeing in the outlook for Asia? You know, Asia has been a big group and a big sector for the company.
Sure. We'll look to their conference call to give more color, but based on the channel checks we had been doing up until the call and the earnings release today, based on our note today, we also indicated that business was particularly strong in Asia, driven by strength in China. That's something a bunch of other semiconductor companies have seen. U.S. is doing okay. I think they'll talk about that business faring okay, and then Europe lagging a little bit in terms of geography.
Hey, what do you need to change to a buy here? If they're already beating the street by as much as they have and beating with the outlook by even more than analysts expect, I mean, 30 to 40 cents in the third quarter compared to a 29-cent expectation, shouldn't that be better than the market's pricing in?
Sure. I mean, it does come down to a valuation expectation here. You look at it, and they do have a wireless business that's about 25% of revenue that is end-of-lifing and phasing off out of Nokia probably by the end of 2012. You look at their analog business that'll remain, and we think on a normalized basis, when you get back to a regular economy or a decent economy, they can earn about $1.20 to $1.40. You apply about a 15 to 18 times multiple on that range, you can kind of get somewhere in the 20 to 25 range. So it's kind of fairly valued here based on what we believe is the appropriate way to value it. Fair amount of downside, same equivalent of upside. So we're sticking with our neutral rating here. You know, if the stock were to come off dramatically here, as it's indicated down slightly as the expectations were high going into the call, then maybe we'd reassess then.
Adam, what are you seeing with cost cuts with the company?
The cost cuts obviously have been great. They've significantly improved the profitability. They've right-sized the business, as have many other semiconductor companies in this downturn, and that will come out of this downturn a lot leaner and a lot more profitable when revenue returns, and that's what you're seeing based on their Q3 guidance. Clearly a lot more profitable, but it's going to take some time to get back to the revenue levels that we once saw back in the 07 level for this company, clearly with the wireless headwind, so analog alone. But clearly a lot more profitable, and that's the key thing of all these companies. They did the right thing in the downturn, and going forward, they should be set up well.
All right, hey, Adam, thanks very much for joining us. Adam Benjamin there, an analyst at Jefferies and Company.